Evening, everyone. How's it going? I just want to do a quick check to see if you can hear me okay, and if you can see the screen. I'll just open up the chat box or another screen. No, just see if everything's
All
fine.
good for me.
Top man, thank you. Brilliant. Right, what we'll do, I think for the first time in a while, I'm just going to absolutely blank out the charts and delete it all and start again. Or was that a mistake? Let me go back. Oh, I can't. Oh no, it is back. Let's have a quick look at the weekly, double check. Yeah, okay, we're going to start again from scratch. And I'll try and make it a little bit interactive like we used to sometimes. So I'll ask you guys to use the annotation tool on Zoom. So if you guys can have a look on Zoom, have a look at the settings and just find the annotate tool, what we're going to do to begin with, just make sure that we're on the same page and don't worry if you get it wrong or whatever. It's just a learning experience. We're just going to mark out the current range that we're in for the weekly time frame. So if you can, mark out where boss and chock would likely be on the weekly. Okay, I'll leave the screen there. Mark out boss and chock on the weekly and where we're currently at. Let me get rid of that alert because I don't need it anymore. Nice. So we've got pretty much everybody doing boss at the bottom, chock at the top, which I would agree with. And then because we've had a bit of movement within this range, what is this type of structure called? It's internal structure. So do we have currently an internal boss and chock? And if so, where would they go? Nice. Pretty much by consensus, we've got there. So yeah, chock at the top. So chock up here, boss down here. This one I saw was marked out. I'm not going to call anyone out. I didn't see who put it or anything, so I just saw the line up here. But this is like internal chock to this structure. This would be chock, that'd be boss. As someone's just drawn on here, we had internally, think of the main structure. We had boss up here originally, so therefore chock was there. So we had chock go in there. Therefore, this became boss. Chock went for top. Within here, we had the pullback, which is cool. So we had the pullback, press back down into normal direction, and then a push back up again. Sorry, I might have to grab a drink in a sec. Oh, sorry, Danny. It will be in your settings, mate, for Zoom. I don't know whether or not it's on the bottom or on the left for you guys. All of my stuff's along the top, but there's a little annotate tool up there. But basically, we had this chock here, became just a wick, looked like it may have been a sweep before a press back up, but this was fairly convincing. Then price broke down. We got the breaker structure. Well, the chock confirmation right there. Therefore, we go to the highest point, got chock there, got boss there. And then we have internally within there, we've got like another internal chock there, another internal chock here. So effectively, this just being like an apex, we don't actually have what was it, the pullback in the correct place. So we've actually got up here and we got there. This is the internal chock. That's the internal boss. This is just another like internal of the internal, which makes it a little bit confusing. So try to ignore this one. That one's like the internal chock of this structure here. And here to give us the chock and the boss. And we got chock and boss there. So I'm just going to double check that. So we're pulling back. That was our break line. We only got a wick. And then we got the body break. So we have to go to the highest point from the original. It was that because it was chock. Go to the highest point. It's up here. So just going to mark that currently as our weekly internal chock. Did that make sense, or is anybody a bit confused with what I just said there? Because I did originally say it was this, but then working backwards properly, it's actually this one up here. And then I can actually mark out the actual weekly chock. So main structure. I always say main structure is more important than substructure because main is always more important than sub. It's like in football, you want your primary goalkeeper in goal, not your substitute keeper. It's a bit like that. But at the moment, because it's the weekly, we still pay attention to the internal structure. But luckily, it's both now heading in the same direction. And it looks like we got a rebalance. So I'm just going to clear up everyone's annotations at the moment because we're not quite done on the weekly. Um, what we need to do now is mark out where our points of interest are, if there are any. Okay, so just draw, I don't know, basically try to draw where the order blocks may be. So it's the points of interest, not necessarily order blocks, but point of interest. Nice. All right, we got some good ones going on. I would personally agree with all of those. All of them. Almost all of them. So I'm just going to draw on what you guys have done. So don't delete your drawings just yet. Weekly POI. There's one here. And we're just going to go through and vote them. And there's a little one in here. Right, so what I'll do is I'll go and delete your annotations and then we'll go through these just so we can get an understanding of them. So we're going to focus on this one up here. I think that was fairly unanimous. I don't know if anyone wants to mention in the comments or on mic or anything, what makes this one a point of interest? What pros do we have? What positive confluences do we have? So we'll look at that one, which is highlighted. Oops. Where's that gone? So we got Francois and James answering in the chat. So we've got a pin, mitigated previous extreme order block, which is this one. Where did the, oh, thank God. Internet's playing up because I'm uploading a massive file at the moment. Pin mitigated previous extreme order block and it made an imbalance, which is just here. Perfect. Exactly what I'd have said. Can you guys, by the way, it just went blank for me. Now it's come back. Can you guys see the chart again and see my cursor moving around? See the crosshair? Yeah, all right, superb, good. It's yeah, basically I've recorded another YouTube video and I did it from my phone and it's 30 gigs. Oh, what a mistake. I'm not redoing it. But that's uploading at the moment using all the bandwidth. Just go through James one. It tapped the extreme to the left. It was the last push up. It was a break of structure. Oh yeah, missed that bit. And slightly tiny imbalance. Yeah. And then we got Carl. It caused shock. It swept. Yeah, caused shock internally, and it swept. Yeah, good point. It was a break of structure, but it was also a sweep because there was no body close above. Okay, good. And yeah, okay. So this one, I think unanimously, absolutely, this is a point of interest for us. So with that in mind, so we won't go through this with all of them, but with that in mind, with this being a valid POI, if you can draw on the chart, what do we want to see when price approaches this, ideally? Considering we've got our structure laid out now for directional bias, what ideally do we want to see when price gets to it? If price gets to it, even. Yeah, you guys have got it. Damn, who was the red one? That's what I want to see. Yeah. We want to see a staggered approach, ideally. And with that staggered approach, we want to see all the imbalance being taken because that shows that we're showing weakness, but we are going in a certain direction until we get to an area where there's been an imbalance. It's done a sweep and a mitigation and then feed our way back down. Now, what if we don't head back down? What if we actually go through it? What would we ideally want to see then? Because it can go through. What kind of pattern do we want to see? Yeah, you guys have got it. Standard break and retest. Really, really simple. Keep it simple. And then within that, so keep your drawings on if you can for the moment. And we're just going to use this green one here. I'm going to use that. On a lower time frame, what is it we're looking for? You could probably just type this one actually, but like what we're looking for on a lower time frame. There's a few confluences really that we'd want to see, ideally. Sorry, making you think on a Sunday night. Like, oh, what's he doing? Thought we were just going to do a chart markup. So got a couple of answers in here. James says order block left behind in the push-up, step down to the order block. I agree. Francois said a retracement to make an order block and then an imbalance up. Spot on. And then Z2F, ZAF, sweet. Sweep and a down candle. Yeah, I agree. We want to see basically the inverse of what we were looking for here. We want to see this, but on a lower time frame, so we can tap into an order block on a lower time frame and feed it to somewhere else, another order block somewhere, or a point of interest. Probably this area, to be fair, just because it's condensed. but yeah, I think what you guys have drawn out is spot on. It's exactly what I would be looking for. So to the moon. Yeah. Um, Superb. Right, let me clear up the annotations. We'll just do a quick yes or no with, let's get rid of that one, with this inside bar. Is this one, what's a negative to this inside bar? There's only one sort of main negative that I can see. Yeah, it's being rebalanced and mitigated. Yeah, spot on. Yeah, I agree. So for me, this black candle next to it was the one that absorbed probably all the energy from this inside bar. Also, the inside bar as well. If I turn it off, it is just a black candle. So it is going in a downward movement anyway. It's not an opposite candle, so it's got less strength in it anyway, which obviously got absorbed by the black candle. So it's sometimes you need to turn off the inside bar to just double check the direction of the candle. But if that was the white candle, I'd be a little bit more intrigued by it, or at least by the wick of the black one. But at the moment, not so much. So with that one, I'll take this one off because it's not necessarily a huge significant turning point. It did mitigate this inside bar here, which was the breakaway from that originally. But we'll probably see on a lower time frame this wick, probably on a daily, it might be significant. With this one here, we've just mitigated it. It's still valid because well, actually, we've just exited it, but it's valid for the moment. Probably something in that wick because that was last push up and the press down, but there's probably something in there on a lower time frame. With this one as well, we'd just mitigated it and bounced away into this area. So essentially, this was the main area where price pressed down to originally. It accumulated and then it shot off. It tried to press down, didn't quite press down, pulled back again. It did what I call the stutter approach. Price then came down, tapped into it perfectly, and has at least short term pulled back to take a refill over here of liquidity before probably pressing down again. It might not, it might work its way deeper into here, but I've got a trade on, so I'm just hoping that goes down. But yeah, this to me still perfectly valid. Yeah, that's right, Matt. That's what we want to see. See it tank. This one down here, no doubt about it. Price came down, as far as I remember, whoa, over 6 months ago now. I think that was like a perfect tap. Even though there was a rebalance there, we just tapped this order block again. So, yeah, spot on. Next area for us to look at once we break down. It's annoying that these two are on top of each other, but it's just the way it goes sometimes. And then we have this one down here, which was obviously the last press down before a press up, but it was just an absolute, look at the close. There's nothing in it really. So, but it was the last press down before the press up, and it had mitigated previously. So once we clear this, there's probably going to be some sort of reaction off of that. And what kind of reaction do we normally get from a rebalance, by the way? It's normally just short term, isn't it? So we'd probably see something along the lines of, break down through there, come back, come up, rebalance with this area, and then head off back to the area where we want to go next. So that's the usual pattern that we see. I'll always say the caveat of it doesn't always happen, but quite often it does. So, but yeah, weekly, I think we're pretty much good. We want to see, ideally, a break of this weekly structure this week if we can. And if not, we will investigate this with a little bit more detail on a lower time frame now. So we'll drop down to daily. Oh, actually, before we do that, any more questions on the weekly? Or has it all made sense, or is some of it not making sense?
The only question I've got, Paul, it's not so much about the weekly, is that I've never, well, I haven't been on any of the webinars for like a couple of weeks, but I haven't seen the internal liquidity marked up before, because once you go on the lower time frames, that will be the high, or the chock and the boss for
Yeah.
a different time frame. But is this something that's been added in recently or
Uh,
mentioned very much?
yeah, I try not to mention it very often. I think in I want to say it's January, we were stuck in a bit of an internal range for a while, and it just got really confusing to everybody. So I tried cutting out internal structure just to put everyone back on the same page, if that makes sense. So
That's when I joined. That's why.
I got you, yeah, because it bloody confusing for about two
Right.
weeks because we had
Okay.
yeah, we had this broker feed update as well, didn't we? And it made under the old rules, it made us chock on some feeds and it made us
Hmm.
boss on other feeds. So that's where I had to change the strategy and also say, all right, no internals trading at the moment. So yeah, sorry for the confusion there. Just to explain that again, we've got chock like main structure is up here and down here. But internally, we're just sort of bouncing around until we do actually get a break of one of these, which it looks like it's probably going to be this one first. Um, we might work our way up. This is the thing, though. We've got so many confluences for this one to hold. We might see price retrace come up to here before it comes down, breaks through this one, finishes off whatever's left in here and goes down. This one, just saw that Matt's just marked it up as we did rebalance already and then we just tapped it again. So like the I don't know double tap, whatever it's called, double bomb. Don't know. Sometimes it happens. I don't think we quite expected it to happen, but we did have this marked out as a weekly for when price came to it. So it was kind of like, oh, okay, we didn't quite expect it, but I have a feeling it was a news candle which pressed us down originally. I can't remember exactly, but it was surprising to see it happen. Um, Yeah, because the previous week we just leveled that previous low as well. So bit of a confusing time, but I think because we didn't press up through here and we failed to break this high, the strength is still down. And I think that candle, that black candle there, kind of tells us a story of the market does want to go down. And I think last week, didn't we have a news event which, yeah, it pushed up originally and then it pressed down? Yeah, that's what happened because I had to place a hedge to go long just in case. But it continued down in the end. So the news normally tells you the direction of what we're going to be doing for the next month. And yeah, it worked its way down in the end, I think. Uh, we'll head over to the daily and see what we're looking like. I've got my settings, so it's turned off the weekly. So I'm just going to change that quickly, just for the two nearby at least, just so we can see it. Where was it? And probably that one. So yeah, we got an outside bar close on the daily. Just gonna get you guys again to mark out. Um, doesn't make too much of a difference. Do you want to do structure first, or do you want to do points of interest? They kind of work hand in hand, so I don't really prioritize one over the other anymore. Probably, probably structure is a bit better because it gives you the direction, doesn't it? Or match straight into it. Nice, perfect. Think it's unanimous. Yeah, we got it. So just a reminder looking at this that if you're looking at your phone or trying to do your markups on your phone, you're probably looking at maybe that. And you would think that's chalk, that's boss. When actually, if you zoom out and you followed the whole structure, there was boss up there, pressed up, which meant that this was chalk. We had to wait until we had a body break. So we got I think we got a wick break here. Doesn't mean anything until we got the body break, revert to the furthest point of the original. So chalk, boss, chalk, boss, boss, up. I actually having. Oh no, sorry, that was internal. So we pulled back. So there's me getting confused there. So that was internal, what I was counting there. So we didn't get a break of that, and then we pressed down again. Nice body break. So we got chock up there, we got boss down here. So perfect. Sorry, I was counting the internal then. So daily chock up there, daily boss down here. Oh, something that I completely forgot to do. Weeking, weekly internal equals down, daily equals and H4 equals, just to keep track, because it's always better to be trading in the direction of the higher time frames. Ideally, it's just the one time frame above where you're currently trading. So if you're looking to take entries on the 15, like most of us, you want to be aligned with the H4 if possible. And sometimes you'll get it where weekly's down, daily's up, H4's up, and M15 does its own thing. But you know, it's good that we've got weekly and daily going in the same direction at the moment. So we've got an internal, well, not in a break of this on the daily would cause an internal. I guess it's a little mini range by itself. Where would you guys now put your points of interest? So areas where price is likely going to react, like not necessarily reverse and break structure or get chock, but where are we likely going to get reactions on? Oh, James, straight in with a good one. Just going to mute myself while I have a coughing fit. Nice. Okay. So yeah, you guys have marked out pretty much the areas that I was thinking of as well. Apart from there's maybe another one that I'm keen on. Um, maybe it's an extension to the ones that you're looking at. But I will just mark these out first, just so we've got them on. So we'll put that down as a daily. Is this been helpful to you guys, by the way, going through it sort of like as a group like this? Sometimes I've got the time to do it, like tonight. Other times I don't. But ideally, I just want to give you what you find best. And I'll instruct Sam to do the same, whatever works. So daily there. And I would agree with this one, even though it's been like rebalanced or mitigated or whatever, I'd still say that. Yeah. Oh, good. Okay. I'm glad that you guys like it. It's been great. Good. Good. So a little bit of well, it's group coaching. We're all coaching each other, which is good. The only difference between what you guys have put and what I would likely put is I would probably extend this one to cover this. Just have a I just have a feeling when you have quite a stern press down, and I don't know why this is showing like a full body. So did we open down there? It might just be this broker feed. Um, phone's in the other room charging. Uh, this might be slightly wrong. If it's not wrong, I would say that this is going to be to start the POI because it's the start of the last push up. That last one, I'm just yeah, yeah. So, but otherwise, I'd be quite happy to say that. But this one up here, again, same sort of reasons as what the weekly had. You know, it's similar. We have, I think we have a tiny bit of imbalance right there. Price didn't quite come back in. Oh well. All of this has been mitigated. So, you know, this one's mitigated that. This one had mitigated over here. This had mitigated that, and then this had mitigated that. And when I'm talking about mitigations, because we're on the daily, we're not looking at a 0.25 mitigation, we're looking at the 0.5. So when I say 0.5, it's the GAN. I've got on here, if I draw that across, the dotted line right across the middle. So if we've had a candle go through the middle and come back, I would class that as mitigated. If we have anything coming up to the line, like, really close to it, yeah, just class it as done. But if we've got like a tap or anything to the like 0.25, like we would on the M15, it's just, in my eyes, a rebalance, possible like small mitigation, but a rebalance more than anything. So on here, there's been no rebalance or mitigation. On here, we definitely had something going on, didn't we? It was a press down. We didn't quite break this, then we pulled back a bit and then came down. So we definitely had some kind of reaction out of that. And it's the most recent one as well. Yes, it's only a wick, but it was kind of like the pullback candle. Down here, definitely agree. Last press down after a series of mitigations before we pushed up and broke even this structure or even that one. We came down, retested this with a rebalance. So we've left behind all of this imbalance down here and we've been bouncing. Yeah, spot on. But I do think if we go through this, we are going to be coming down to something down here. And because it's the bottom of like an overall structure, so we've got weekly, daily, probably an H4, probably even a 15 down there. Because it's the bottom of a main structure, you'll see sometimes press down, little retracement before a full-on smash through. So, not always, because obviously we had like over here, a bit of a sweep, minor pullback. Oh, well, actually, yeah, there we go. Kind of happened. And we got the curve liquidity as well. Spot on. I didn't see who drew that, but yeah, the curve liquidity. We've got the mitigations effectively of everything apart from here. And we got the now liquidity underneath. Thanks, James. Sorry, I just saw your name on there. So I do think that there's something in this one as well, because it's just below here. Again, a bit of a stutter approach. We've come down, tapped in, near to the area. We've now got liquidity sat underneath here. Sorry, the liquidity is actually in the order block, but we've got like a clear run on liquidity. There's like no orders underneath it. Well, there's loads of orders now, but there weren't before. It was imbalance. But yeah, I think that these are all correctly marked out. So I'm just going to clear up the chart again on annotate. I think that's looking pretty decent. So now we'll get down to our pretty much our entry timeframes. So let's mark on here. What direction was the daily? Daily boss was down there, so daily is down as well. Superb. So
I think on that liquidity point, interesting the way we use words.
yeah.
So I've always thought two different things. Oh, there's loads of liquidity here, so we shouldn't take this. But actually, there's two ways, isn't there? What there is there's loads of liquidity in here, so it will bounce off it. But what's under here is arguably very little liquidity, so price will go straight through it, looking for the next clump of liquidity. So if we believe that it's bounced, this is probably why it runs this, is because there's nothing in there, is there? So actually the liquidity, as in the juice that the market needs to move, is here, and maybe probably not here, because that's also rebalanced. But do you know what I mean? So it's like this will probably work.
I agree
Will
with you.
anything here just go straight through all of that in theory if it doesn't, if this isn't strong enough?
Yeah, I do agree with that actually. It's yeah, there'll probably be just a minor pullback off of something here, just because of the structure element, because everybody else is looking at it. But other than that, if this wasn't such a main bit of structure where this is, I'd say it would just completely go. Because if you think of the liquidity, literally just the buys and the sells. So the I think the buys are on the, so looking at a DOM chart, like all the buys are there, all the sells are here, price is exactly here. These guys cancel out those ones, and if you want to be able to move the price up and buy, this has to reach that. It does it through the spread. If you can get the same amount, great. If not, if there's not enough in this one, but there is enough in that one, then they're going to get slipped, but they're going to be able to get into the trade, and price moves up to the next level and to the next level. And that's kind of how it works. But all of that takes place in the order blocks. So the actual order block here is this. That's an order block. This is a point of interest. Was an order block. That's that's a that's an OB to me. It's where oops shit. It's where the liquidity is. So let me go back to that.
It's also where my exit is.
Oh, what over here?
Yeah, basically, I thought we'd go for about this area.
Oh, that as well. Oh yeah, for sure. Well, the OB is over here.
Yeah.
So there's loads and loads of liquidity in this, but because there's people also down here, like waiting to break out. Because remember, not everybody looks at the whole market. They'll look at just very short term. So they'll be looking at this thinking, okay, breakout trade. They'll have trades literally straight on the line to sell, and they'll have trades just below to sell. And the guys who got long down here, their stop losses are also just below. So there's that exchange of orders just ready to be gone. So the guys who have pending orders can't get into the market yet because the current price is up here. But when price does go down here, it just starts like, bouncing around a lot because that's all the buyers and sellers fighting against each other, trying to get, slipped isn't the right word, but basically trying to get into a position. So it should cause a little bit of something and then press down, get into where the last bit of liquidity is because we had the transfer of power. This is the extreme in my eyes, of this structure. This is the extreme order block because we had the press down here. We got mitigated pretty much, rebalance mitigated. This one definitely mitigated that press down. This then mitigated that. This then swept further into there. This then swept the two of them and mitigated even further. And then we got our breaks of structure upwards. We came up, we didn't break that. So we're definitely working our way down. We should break through these areas. But if we are going to get a bounce, it's probably going to be from this one because it's the extreme of this kind of structure that we're looking at now. So we've got that on the way down, which is good. And we've got basically the same kind of thing happening with this one as well. So we've had this, took out whatever was in there. That mitigated this, that mitigated that, this one mitigated that, this mitigated that. And we're just left with a load of imbalance. So if price does come up to here, it may well be the transfer of power to send it back down. But if we think the overall trend of the market weekly is down, I know looking at this, it was up for a bit, but the weekly is down following how we follow structure. I would expect this is almost a dead set turning point to go down. And this one is likely going to be short-term press up, possibly just to here. So if we do drop off, if we drop literally like down, should work our way back up to this area and then come down again, just to refill this imbalance if there is going to be any. Might be completely wrong with that, but it's quite often the way. I think I remember thinking on Friday, depending how the H4 closes, which I don't think it did in the end. I don't think I looked, but I kind of expected there to be no press up today or tomorrow, technically, I guess. When the market opens, it should just be a straight drop, but I'll be able to check that now on the H4. Yeah, actually. Not quite how I wanted it, but yeah. Anyway, so H4. I thought basically if price was to rest down here, or if it was to rest there, it would just be a straight drop. But I think that this was good enough confirmation that it's going to go down. So we got H4 again. We do pay attention to the boss and chock, the general direction of the H4. But the best thing to think about really is we're trying to take entries on the M15. So we get stop losses of between like 2 and maybe about, I think I took a trade the other day. It was like 10 pips stop loss or something, but between 2 and 10, usually about 5 or 6 pips. And our initial take profit is going to be that same time frame swing. Then the next one is going to be boss, usually on the H4. And then the next one is going to be the next H4 POI or daily POI or weekly POI, which one's soonest. So with this, we've already come into the weekly. Okay, so it's not like the weekly is starting off down here. We've already come into this. So if we're in this short, like I'm in a short at the moment from up here, I know a few of us still are. Ideally, I'll take profit. Actually, I'll let, yeah, absorbing all that. Where's the take profit? Like the initial take profit target going to be? If you're going to take partials, or if you want to play it relatively conservatively, where's the initial take profit going to be? Yeah, yeah, it's going to be the boss. The breaker structure coming down, then the next zone. So next zone down there, breaker structure. So we're on the H4 now. Don't worry about that. We'll come to that in a minute. Just mark out where the POIs are again, if that's all right. I'm going to mute myself while you do it. Grab a drink. Right, good job. Looks like you guys have drawn a fair few on there. So I will, yeah, agree with everything that I can see. So we're just going to mark them out. We're going to put this inside bar on. Definitely agree with that. Well done to whoever did that one. And then, yes, up here as well. Hopefully it doesn't come back to it, but it might. Did I draw that?
That was me. It's a bit of a tricky area. It is the last downwards push, which then led to the sort of the internal sort of break of structure. But we have rebalanced and then pushed higher. So you've got the little wick in between the two bullish candles, but that was the last sort of press down. So it's kind of, I have it marked out, paying attention to the one that Danny drew just above it, but I kind of almost expect this to be the last point that we could see a stronger reaction from, because this to me is all sort of curved liquidity. If this low goes, I'd expect to see the rest just plummet from there, really.
Because if we look at, yeah, that being a sort of structure, you know, this mini structure down here, I agree. This is the last holding point, really. So yeah, I agree with that. Yeah, spot on. If that goes, this should go, and we should feed down into this. maybe have a small reaction from there. But now looking at it on, you know, a greater detail, you know, on the daily, it looked like maybe there could be some, you know, there is going to be orders under here, but because we understand how the wicks work, we know that there's likely just going to be a plummet straight into this area. So I would have a lot more confidence now, not placing any bets on price sort of pulling back from here. Might do, but we've seen it time and time again. When we've got curve liquidity, price just literally plummets straight through. And I think, do we have non-farm payroll this week? Because that might do it. Yeah.
Oh shit, I'm gonna wait till Friday.
Yeah. So maybe a bit of dancing around this week until we drop off, but that should be the case. But yeah, I agree with this, and that one as well.
Of
So
these two that you're playing with here, like the imbalance came after this one, after the inside bar. So would you have a view on whether the top half of this or the bottom half of this is where everyone's placed their order, or where the partials that have been left behind are sitting? Or
good point.
is it just we don't think about it, we just take the whole thing? Because I don't really like taking the whole thing because it's a crap risk reward.
Yeah, no, valid point. I would have said yes, that this is a point of interest, pretty much as soon as it was formed by this white candle here. So definite point of interest because it's an inside bar, and obviously came down, got a perfect rebalance there, got another perfect rebalance there. We just tapped into it again, pull back, probably class that as a rebalance to be fair, and then probably work our way down, get through it at last, get into this. We'll probably have to find something on an M15 down here to see if there's going to be like a little, again, probably just a little bounce and a rebalance, maybe even up to this. But I think downwards is most likely. But if it's not going to happen, if it's not going to be down, we're most likely going to see a breakthrough here, bit of a struggle. So push up, probably pull down again to maybe the break up through there. We want it to come back down and retest this. Work our way up to probably the daily up here. Oh, I forgot to mark that one out. Sorry, I'll do it now. And then maybe press down from there, because this was an area of multiple chain reactions. But what we also sometimes see as well is a liquidity grab. Where's my finger? There it is. So on the H4, let's just looking at this area over here. So inside bar, it's good. It was a nice sell-off point. Inside bar, definite orders within there. There's imbalance-ish. Yeah, there is imbalance right there. If we got, and this comes down to timing, by the way, so you've pretty much got to be in front of the charts to get into a trade. Price has worked it up. We're just going to imagine that price has gone did. And we got to there. If we get a close somewhere nearby like that, this is where you'd be okay to take a short from. So even though you'd be breaking a daily structure and breaking like it, well, you know, sort of internal, probably daily structure, daily POI, you'd still possibly want to take a short out of this. If price reached, you know, something like that, I wouldn't necessarily be placing a short out of that. It would have to be nearby, because quite often what we'll see is, you know, the start, say it's like 2 o'clock in the afternoon, come up, tap into there, 3 o'clock, price comes down, New York wipes out the rest of what London's done and start working our way down. So that's miles away. That could be probably not this week. And I hope that we don't work our way up there, because I do just want to see price drop off. But we've got to be prepared that we might continue up, because we've just got a sweep here. That was to press down on Friday, wasn't it? This was the last candle of the week, which is normally worthless. So last 4-hour candle anyway, because it's in my eyes, just kind of using common sense, it's the last 4 hours of the week. Nobody is working apart from the Americans, and I would assume that they're already chilling in a pub somewhere, enjoying what they've done throughout the previous week. So the last 4 hours I never really count as anything. So really, it's this POI which we might work our way back up to. And again, I hope that we don't. But we've got every reason to break down here. So if we mark up where the boss and chock is for the H4, see if it changes your opinion on what we're doing. The higher time frames definitely say that we're going down, but as we're taking entries on the 15 and we're trying to target the H4s, sometimes you can override the H4 with the daily and the weekly. In this instance, I'd be incentivized to do so. Incentivized? Wrong word, but I'd be thinking to do it. Nice. I thought we had a couple of different ideas of what was going on there, and I was gonna say differently to what's on the screen now until I just kind of double checked it and redid it in my head. I think that is correct. Boss is up top, and chock is pretty much where we currently are.
It's kind of like the difference between strict measurement of the confluence and read the price action.
Yeah, spot on. Oh, well said, actually. Really well said. There's it's almost 50-50. The amount of times where I've read the price action and I read it correctly, God, loads of times. But then also there's been times when I've looked at the structure and I thought, nah, not a chance for that hold. And it does, because it's what structure tends.
Yeah,
In this
that's
is,
fair.
yeah, it's like where I'll mark out where the boss is first because it would be easiest to mark out. H4 boss is there. H4 chock was here. So I'm just going to zoom in so it gets a little bit easier. I'll just clear out the chart. Like that. So we were working our way up. We got a break of structure going up. Therefore, chock was there. Price went up again and it pushed up. So boss went up there. And we go to the lowest point between here and here. Come down there. That was chock. What's happened since? We just got a wick break. But we know from what had happened in January, which changed the rules of the strategy ever so slightly, is that when we get a wick break of chock, we just extend where chock is, but we still pay attention to where the primary structure came from. So we've actually got chock going there, and then it's just been extended to here. So what we want to see is a body break through this to confirm the change of character. Therefore, chock can switch and it can go to there, probably at this point. And boss will swap places and head its way down. So the H4 is technically up, which is a bit frustrating because we want to see all of these go down. However, because of the way that we trade, and we know that mathematically we'd be quite smart to place trades on both of the extremes, I don't think that there is two extremes to take trades from, at least on the H4. There's this one up here, which, to be fair, has been rebalanced. And there's no extreme down here. We're now just on a wick. There might be on a lower time frame, but as far as the H4 is concerned, we've got what's going on down here. We've got sort of like a changeover type thing. Price came down, mitigated. So that's probably more realistic now, but we'll keep it like that. And then with this one, it's still the two areas. I'm gonna drop down to the M15 to see what we can do, but I think that this is probably the most accurate representation of what we're looking at. There was also, sorry, I forgot to mark this up, but somebody did draw it on, and you're right to do so. There's an H4 here as well. M15. I need to play something off of that. Anyway, we had the first bit of news on Thursday. What was that? Yeah, whatever. So press up, press down, and I was surprised that we worked our way upwards. Anyway, we started pressing down, got more of a convincing break right here just before the news. I thought we had some news earlier in the day as well, but I guess not. Price came up, retested the last push or attempted push to get out to the top. So that was almost like a dead set trade, but I didn't take it. I think I was already in it. Oh yeah, because it was a trade based off of over here. So we'd left behind that order block from a couple of weeks before. So there was an OB over here. Even though it was only an M15. Now I'm going to go to a higher time frame on this to try and make it make a bit of sense. But we reacted from that, which I thought was going to be the case, especially as we had the rebalance. We then had the mitigation. I think, James, you took yours off the 0.5, didn't you, in there? I should have done, considering the size of this order block. It's huge. It's 52.5 pips.
Yeah, I took it off the 0.45. I didn't want to risk setting it too high on the 0.5. Not that there was much difference between the two, but I wanted to be in that trade. There was no way I was missing that.
Yeah.
But yeah, because the 0.25 meant that the stop size was like well over 10 pips. So that's where I then add in taking it from the 0.45. So
Yeah.
I went
Good
on
point.
0.5. I nearly went on like the 0.75 as well. So I was like, there's an M1 in there. I decided that was pushing it.
Oh, man.
my entry was at 476 for mine.
476. Nice. Just, oh, yeah. Good entry, man. And that's funny because I remember you saying, Matt, oh, I've never won a trade on the M1.
I know. I was like, fucking, excuse me.
It's like, yeah, literally happens. It does happen.
Yeah, it's beautiful. And yeah, I think I'm in at 483.
Oh, well done. 483. Oh man, you guys are in better than me. I'm in something like I'm in on the exact 0.25, so whatever that is. But yeah, and with this one, that was like I wanted to place off of this, but I didn't because of the red news. I just wasn't sure what was going to happen. But yeah, perfect place.
Why do you like that one there? Can you just explain again?
The one in red. Oh, this thing.
I'll just delete my drawings.
Yeah, so this is one which I was looking at over the weekend again, and you see it quite often when you get. I'll try to draw it out, but you get sort of like a push up, that being the boss, the highest point. Press down, sort of retracement before you do get that break. Then price will try again, come back. And quite often it'll just come to this one. So if you look at the sort of like premium discount on the leg that's just been created, that to that, it's usually about the EQ. Yet at the same time, it's the last attempted push up before failing to actually mitigate the final order block at the top. So with this one, it didn't quite mitigate or rebalance with that. It's the kind of like the last.
Paul, this is exactly what we've just traded on the daily.
Yeah. So,
Paul, could you go over that trade again? Because I'm not getting it in terms of it looks like this one everyone's saying that they took on the 50%, but to me it looks like the 4 hour is trending up, so you're going against the trend, and at what point are you no longer looking at these older order blocks? Because that seems really, really far away. So
Yeah.
can you sort of run over the logic for me? Because
Yeah,
these are sort of things where I'm like, how did they
So-
get to that?
Yeah, some of it just comes with general like chart experience, I guess, or just seeing it happen over and over and taking a bit of a punt on it, which is honestly what I was doing. This bit being the sort of like, I don't know what to call it, but it's like a changeover candle almost. It's a wick to a wick before a break. So we didn't get a break of structure on the original press down. We just had a small retracement. It's almost like an inside bar trade. So whenever I see a wick down, then a small wick up, I basically class that as an order block. It's like an inside bar. Then we got the aggressive move away from it. So definite interest from me there. Even though this isn't technically, main structure. Ah, there we go. James has literally just drawn it out. I was going to say this where we had a retracement. So we had an attempted pushback to here and then the serious drop-offs. I'll just mark out on here where the EQ is and it literally falls straight into there. So quite often you'll get a reaction. Like sometimes it is just a reaction and we just need to trade it to the next, area where there's going to be supply or demand, like the next rebalance effectively. But I looked at this structure, even though it's not, the main daily structure, which was all the way up there. So if I did it from that to there, you'd get to around about here. But this is where the order block moves or the extreme move, sorry. So just using that sort of prior knowledge that this was the order block, break structure down here, extreme, transferred the energy over to this, then transferred it to there, then transferred it over to here. And then we had this sort of like falter just before we got the break, and then the break of that as well. So for me, this is still fairly significant. So I just built a structure off of that, and it just happened to be right in the middle. And we know that the EQ, when you've got like a really aggressive move, so we're working our way up, and then you just get a straight drop. For some reason, the EQ right in the middle tends to be the reaction point from a big move like that. And I just kind of saw it being the same. I thought, right, okay, go with that. Especially as it had that little stop point in the middle. So I thought, if we're going to get a reaction out of this, it's probably going to be here. Because on the H4, yeah, it was just nothing but imbalance above. Don't know about the M15 though. I don't think there was much there either. Yeah. We had I thought we did, yeah. Like I'm doing it like this on purpose. So I'm squishing it up on purpose so we can kind of make sense of the sort of bone structure of it. Definite reaction point here because there's quite a few candles pressed together. When price came down, it faltered here, retested this bit again, and then worked its way down. So it's the break and retest guys, or the breakout people, the reversal traders, all trying to place orders off of this because we all saw that as fairly significant. Just in general structure, just looking at it, it's like, okay, that possibly a reversal point. It wasn't for them. It continued through. So another point which I was interested in, if this one didn't happen, would be that. So it'd be like that had formed, then we got a retest of it, and then we'll probably get a retest of the retest just to confirm that we're going to go down. However, with this, what we had was it was the last sort of like semi-significant press up. We got a sweep of whatever was going on there. All of this was just sort of like flat. So we had the incentive to go up. We mitigated whatever that was. I thought it was an inside bar. It was, yeah. So the inside bar, it was fairly significant. And it ended up being the halfway point between this big drop off and where we reached. So I thought, yeah, it's the EQ of that area. We'll possibly react from that. So more of like an experienced trade, if that makes sense. Probably the more like advanced bit of the strategy. I wouldn't have expected everybody to be looking at that, to be fair.
Okay, that's good.
No, I was fairly surprised to see that others were looking at that. I was like, Jesus, okay, it is the way more advanced bit of the strategy. Probably the final bit to learn, really. But it's making sense of the structure, which isn't set, boss chalk structure. It's looking at the price action structure, and support and resistance. Just like mixing the raw basics of trading, which we're told not to do, but in reality, it does still work. Support and resistance. We get tests and retests and breaks, and then a retest, and then we'll retest that, and we'll transfer the energy. So when I say energy, we're transferring the liquidity to new blocks. And I thought maybe that it might be the case though, where this is just putting back. We got the we got chalk with a wick. Could be pressing up again now. Hopefully not. But yeah, that one was definitely the extreme bit. So I keep forgetting, what's your user in Discord? I keep talking to someone. It's you.
Zafar H.
Zafar. Oh yeah, okay. That's easy. It's yeah, who is it? I keep thinking is you. Like I keep talking to him as if it's you. So
I have no idea. I don't think I've spoken to you much on Discord. I've spoken to a bit to Sam.
Yeah.
I haven't posted much on the actual channels because it's just a bit too much going on when you're trying to follow everything. So
no, I can appreciate that. We're trying to find ways actually. I just don't know how to better it. I'm trying to find ways where there's I guess there's a balance between people wanting lots of information versus those who just want to have a quick glance and go, oh yeah, that's just confirmed
I
what
don't mind. I think it's the back and forth banter, which I don't mind in between, like the explaining of trades. So like if you're scanning through 200 messages to see, oh, okay, someone's placed a trade. Have they placed a trade today? And maybe have a special area just for the senior members that they can only post in, and then they're just putting up their information and discussing stuff there. Might be a better idea. I don't know.
That's just made me think of something.
You've got the advanced chart section, which is where I post in every day, like my markups in there as well. So just to kind of keep it separate from the noise in the EU chat.
I'm just
Yeah, I'm looking at
whether
that
we need
now.
an actual posted trade idea. Not as in, you know what I mean? Like I'm going to do this, which is separate from the whole stream of chat, so that you can still find the idea when you click onto Discord.
What this is going back about a year and a half ago. I think it precedes everybody on the call, apart from Carl. I think Carl was in the group at the time, but I used to have a section where it covered every trade, even if it was just missed, even if it was hindsight. But it was just like it was keeping the chart up to date for everybody. So I used to update it when I had way more time. I used to update it not every 4 hours, but after every H4 boss or H4 chalk. So I might actually, I think I will look to re-implement that because we're going to be doing the markups service probably this week or next week, and that's going to be including everything anyway. So that will just be a delayed version of the markups, if that makes sense. Not markups. Is markups the right word for it? Sort of like the signals type channel. But this will just be a later version of the signals.
Like basically what we've just done today, but you're saying these are your levels you're looking for down to the 15-minute.
Yeah.
And then I guess markups.
Yeah. Or have you ever seen have you ever been on hot UK deals? I'm going somewhere with this.
Deals.
So people post deals and you can either vote it hot or you can vote it cold. So if it's a good deal, lots of people vote it hot. So the hottest deals are the ones that, if you want 25 cream eggs for 20p or something, then you buy it. We could do the same thing with these ideas. We could all dump our ideas and just come along.
I was wondering where you're going to go with that. I don't know hot deals.
But you know what I mean? If people just put their ideas that you can go yes, no, yes, no.
I think that's a cracking idea. That is not a bad shout, actually. I think, yeah, okay. Let me just write that down as well. Sorry, I'm the slowest writer in the world.
So. Nice return pun there as well, for following on from the cream eggs. It's a cracking idea.
Oh, nice. So Yeah, and uh, voting ability.
Have a little look at hot UK deals.
Yeah.
And just flick. You'll understand. You- Like so, you'll get the random, Nescafe Zero or something. It's like 869 votes, or somebody wants to sell I don't know, some graphics card at £3,000. It's like frozen.
Oh, nice. Add voting ability for POIs.
And you can have everyone, add dump trades in there. It's a great way of getting a barometer, isn't it, of what the group thinks is a good idea and a bad idea.
Yeah, I like that. It's yeah, because I used to do basically every like the markups thing, which I'm looking to do. Like I'm not allowed to give out signals being UK based. Like I'm just not allowed. So I have to do it as kind of this, like what I've literally done.
Yeah,
It's
well,
this
realistically, the signals were going to be like limit orders. So if you just marked up the chart and saying I'm going to be entering off of here, that's probably better than the physical typing in the positions, because no one's learning from that. No one's going to type in the numbers on their chart. They want to rather see the actual chart, see a little, your zone marked off like that there, and then they'll put the same thing on their chart and then see what happens as and when it happens. For me, at least, I consider myself a beginner here, that would be a lot more helpful than entry X, 2.1376, stop loss 2.1789, and then take profit 1 here, take profit 2 here. Actually seeing something on a chart, I think is much better.
Yeah, I fully agree with you. And if you needed to, just look right and see what the exact figure is. But generally speaking, this and a bit of explanation, as in like, okay, we've got curve liquidity under here. We got the extreme has moved, but it's been mitigated. We've had to combine 2 order blocks together. Up here, we've got an extreme. This had bounced off an internal EQ, etc., etc. This is the trade I'm interested in. That's what I'm allowed to give, but signals wise, just not allowed to do it in the UK. Well, I can, but I will be ripped apart through court like anybody who loses. So it's not allowed to give out the figures, but I can give out the markups, which is no problem because it's literally a demonstration as to what's on one chart. So it would be Sam doing most of it, to be fair. So thankfully, but it will be with my guidance at least to begin with. But I used to, yeah, when I had more time, and I want to do it again. But on every boss or chock, I'd get the alert, I'd jump on the chart, and I'd mark out immediately all the order blocks which were available. So it didn't matter if they were the best ones or valid or invalid. Oh, sorry, it would matter if they were valid. So, for example, there'd be one up here, there'd be one there, there'd be a counter trend one, probably that inside bar, and one there and one there. So I just mark out all of them and say, right, these are the sort of order blocks which we're looking at. And then it would just be down to the individuals to put your own confluences in and go, right, okay, I'm not interested in that little one. I'm more interested in this one. That one's okay because it's the EQ of the structure. And that one I'd be interested in because it's the extreme. And this one, just on the off chance that we do bounce up from there, I'd be interested in that. But the strategy has changed slightly since then, since I was doing that, because we've just got more knowledge. We've just got more knowledge on how the liquidity moves. So, yeah, but I want to try and get us to provide more information. So, I think the majority of people in a community want to learn. Hence, we're a community. Like we all chat and we all have fun and stuff like that, which is, I think, essential in not losing your mind during the day if you're doing this or you're trying to do it full time or trying to lead to full time. But I fully understand as well, time constraints. Some people don't want to learn it, they just want to benefit, and that's absolutely fine as well. So it's the need for the signal side of things. The plus side is that our strategy works. The drawback is not many people know about it. So just seeing, sorry, I ignored the comments box by accident. I mixed him up with Matthew. I'm not sure who that was. Sounds nice. I don't know what that was to. Sorry, I've literally just reopened the meeting chat thing. Then Con, I am the lone voice that would love to see live trading, especially with the signal service. Moreover, the fledgling starter days of the signals. Yeah, yeah, I want to do more live trading. I'm hopefully I'm at the gym every morning now at 6:30 till 7:30, and I'm back here by about 10 to 8. So hopefully I will be on the charts at 10 to 8 every morning. Can I just do that live in Discord and just share my screen? Like it won't be recorded and put on Zoom, but I could at least do the London session. Oh, not London
You can
session.
jump in on Sam's sessions on Mondays and Thursdays.
I haven't been.
No, but you could do. As I said, if you do that, he starts at 7:30 now because he's moved back to Australia for a bit. I haven't
Perfect.
made any of those yet, so it's like
It's yeah, literally. He did ask me, he said, do you reckon it would be okay to move it to the mornings? And I said it would be better because it's like the London, even though technically the Asian session is the start of the day, the London session is really the financial side of the day. It's where more money goes into the market. So it's way more beneficial for us to do a London session or London Open at the very least markup because the London breakout, I don't know if anybody or if any, well, yeah, I don't know if anyone in here knows, but I made a London breakout trading strategy about 4 years ago, and that turned into what we're doing now. Realized that it happens not just during London, but the London breakout still works to an extent. We just bettered it, but
Oh, is the London breakout where you get an imbalance candle, then you slowly go back to it, and then you go again.
yeah, it's just literally a break and retest.
That's like having the light bulbs just got.
Yeah, London breakout is dead easy. I liked it because it was mechanical. Like that would be the Asian session. It would just range, not all the time, but if Asia ranged within like 20 pips, uh, you're in for a treat because it would go like this during Asia, then we get a little push up, then a press down. And I used to trade the breakout. I used to just be like a breakout trader and just trade down and just do like initially it was like a 1 to 2, then it was like 1 to 3, and then I realized I'm not recording this properly, and then I started using the daily ATR, and then it was actually the sessional ATR. So it was finding out on average after the breakout how far price went just during London. And I settled on, I think it was on 65 pips. This was GU, not EU. But then I realized sometimes price comes back in and then it goes. And then New York will quite often just eradicate everything which has happened during London. And then other times it would continue down. It would rarely range. Um, so I had a few edges, and it is slowly because at the time as well, I went from doing the London breakout to having to trade the daily. So I just had to trade zone to zone on the daily. But I realized that this isn't unique to Asia and it's not unique to London. It just happens all the time. So it was when I quit trading that night and I just had a bath and I was like, yeah, I'm completely done. And then something just clicked. And I thought, oh, I just need to combine the two. It's like, I know where the daily's going. I'm right almost every time. Um, and my London breakout is based on the 15 minute. So it was originally the 15 minute in the daily. The H4 just helped with getting more trades in. So trading the daily with the 15 minute was monstrous, but just very few trades because you have
It's
to wait.
interesting. It's really interesting. Sorry to interrupt, because I always thought this strategy was basically like you're trading the H4. So you're actually not really the way we are trading the F15. We're just making sure we're going in the direction of the higher time frame.
Yeah, yeah. It's why, like, even though the daily and the H4 don't fit well together, I thought they did, but they don't. The weekly and the H4 do, but the daily is really the leader. So we had a guy in original FTB. So it used to be called Fuck the Banks, but it's actually Fuck the Rest. And anyway, Dan was in the group and he used to be a hedge fund trader. So it's like, pretty cool, quite handy. And he told me that the lowest time frame that they were allowed to use was the H4. So He was like, I'm glad to see that you're doing the H4 ball because that's what we were taught. I was like, okay, good. But he basically said that, and it just confirmed everything that I'd assumed, that your sessions, when you're at work, between getting to work and lunchtime, it's about 4 hours, isn't it? And then after lunch and going home, it's about 4 hours. So the sessions, there's only 2 4-hour sessions that or maybe three-ish, that I'm interested in. And it's kind of 8 a.m., even though it's not the close of the candle, but it's like 8 a.m. to 12 UK time, and then 12 till 4 is the crossover between London and New York. So you've got both the financial market strength during that sort of 4 hour period. And then you've got between 4 and 8 again, which is pretty much just the New Yorkers. So there's three main 4 hour periods, but obviously on the charts, we get 6, 10, 2, and 6, just because of the time in which it actually closes the candle. But I try to pair it up mostly with what time it actually is in the UK, and try to couple it with what time people are getting to work and what time their lunches are and stuff, generally speaking. And it just tends to fit. But yeah, the H4, the reason why the H4 was added was partially because of the sessions, because of the times in which there's gaps between London starting and New York starting, and their general working shifts. So I just tried to use a bit of common sense. But really, the daily is the driver, because when you think the news and Bloomberg and stuff like that, they talk about, oh, today the pound was down by 1.3%. Yesterday it was up by 1.2%. They don't look at anything less than that. So when you've got big money going into trades, like I do it with crypto and I do it with stocks. Like I don't look at anything lower than the daily. I'm just not interested. Like I'm not a trader with those things. I'm an investor. Like I'll look mostly at the weekly. I don't really care about the daily. And it's the same thing with the big boys. So if you can get an entry off of the M15 in a daily zone, and you are pretty certain that that entry is right, just stick to the next daily. But the reason why we look at the H4 is that you'll quite often get a lot of movement between the daily zones. So if I just, I'll just show you actually. So the daily way of trading that I used to do was literally, it was just support and resistance. Even this is fine. So just used to go through areas where there's lots of touches, like there's a zone there. It was like a touch here, a few touches there, a few touches here, and then obviously break through when you get to it again. There's another one, probably say here. It's been a while since I've done it. Definitely another one up here. Then there's another one up there. And I've just noticed that there's like the perfect trade candle. So all I would do previously, and this is literally, this is what FTR is. So you can do this on the daily, by the way. You can still do it now. Like it's never going to stop working. It's worked since the beginning of time. Like you identify a zone which has had multiple hits. They're just psychological levels. They're levels on the map, basically. This is just a map. Price passed through, came up to it. We got a pin bar. We then got a engulfing candle, place a trade, basically off the low of that engulfing. So this would be a trade. It's quite big, but you place a trade, maybe a couple of pips below the lowest point of that candle, and your stop loss would be a couple of pips above, just in case, sweeps and stuff like that. And then your target is literally, a lot of people would say it's got to be the next zone, but they're zones. This is the problem. They're zones, they're not lines. So using this strategy, it was very much like just kind of a little bit subjective. Like we now know where price gets stuck and it's actually in the order blocks. So we now know to go to the imbalances, like down here. But if this was another zone previously on the left, yeah, maybe. Great. But what we would try to do is try and take profit just before you get to it, because you just don't want one of those things where price kind of reacts out of nowhere and it doesn't get there. So you just want to take the surefire profit, but you frequently it would be like 1 to 3, 1 to 4, but it would take you sometimes a couple of weeks to get there. And the perfect entry, so that's one of them. So you get a nice engulfing candle with a couple of pins at top. Really, really good. That's like my favorite. And then the next one was literally this. This is what I noticed before I started doing that one. This is what I noticed here. It's an indecision candle. So this is where it could go either way. So if we stick on bar replay right now, it's like this could go either way. It's in one of the zones that I've marked out. I've only marked out in hindsight because I've seen that. So let's double check that is a zone. Probably. Yeah, I don't know. Let's say that it was a zone, just to make this easy. Indecision candle. So you could literally place a trade going up like that and feed back to the next zone, which is going to be about there. Or, well, and not or, and you place an opposite trade like that, and one cancels the other. So some brokers, you can do a one cancels the other trade, and you feed it down to the next zone, which is here, which isn't far, unfortunately. Is there a way that we could condense it? Possibly. 1 to 2, like, you know, it's a bit shit, but it's still profitable because this one, I know, well, I do know, it was 65% of the time. So that's a more or less profitable system. But I realized that it's not that profitable. Like, it's profitable, but it's not going to make you a fortune. And you'd be holding trades sometimes for 2 weeks. The fastest trade I had was 2 days, and the longest trade was over a month. But I managed to go through. I've still got my, where is it? My watch list. Ta-da! There it is. That's my old watch list. So I just went through those every night. So 50 odd trades, or 50 odd pairs just overnight. And I learned, like, you could still trade like funny ones like oh god, Singapore dollar and stuff like that. Like, you could do that. So yeah, that was my old trading method. And I combined that with my London breakout, and I thought, oh my god, yeah. Like, as soon as I realized, like, it was when I decided that I'd quit, because I was like, I'm never going to get rich doing this. It's a scam. It's a load of crap. And then I realized, oh my God, I'm so accurate with the daily. Like, I just know where price is going. I'm right most of the time. What if I can just get a smaller stop loss, and just get a very precise entry? And that's where I started paying attention to the Asian session and where it was starting to condense with that last push up, which we now know is blocked orders. It's people thinking that it's going to ping back out of that area. They're stuck. They're blocked orders. They're blocked. They're stuck. They're hoping that price is going to come back. Therefore, instead of my entry being straight on the break line, the stop loss behind there, and then the stop loss moved to behind the swing, it ended up being the order block. And then I realized, actually, the order block, if you start cutting this up, what percentage in does it go? And that learning of figuring out how far in it went actually came from my time when, let's see if he's still on. James is still in. So the learning of measuring the pullback of the area which I was looking at came from my time at GT, where somebody else had measured it, and I was like, oh my God. And it was almost like the missing piece to my strategy. So yeah, it was pretty good. And combine that with the targets of the daily, which I was doing, was perfect. But then I realized, oh my God, I'm bored because there weren't enough trades to take. So the H4 came in. And that's when I started to notice, oh, structure. So structure was a whole new, oh God, it took 6 months to get my head around it. But I had to try to make it make sense to me and make it make sense to my friends who weren't traders, apart from Dan. But trying to teach the guys who were non-traders. Oh, Jack as well. Jack's in the group. He was in the group too. But Jack's been out for a few months. He's had a few issues that he's dealing with, but he'll be back soon. But Jack and Dan and Sarah, who's sometimes on the call, she was on it. And yeah, they're the original sort of 3 out of 6 who were in FTB. But yeah, that's where it all came from. But yeah, it's pretty cool. But we've learned quite a lot since it all began, maybe close to 3 years ago. But it's probably at a point now where I just don't need to improve it anymore. I think 20 to 30% a week is enough. Don't think I need to try to improve it. But there are ways to improve it. Like there's definitely ways to improve it. And I think it's based more around the entry than anything. And then the discipline to actually take the trades. But yeah, at the moment, I think the trades for tonight. Oh, we've only got 12 minutes until we open. Might as well hang about until then. Where do we think it's going to be valid? We've got that one which we're in, which is cool. Oops, shit. There was, I thought, the other day anyway, there's probably this just to be a nuisance. It's kind of mitigated anyway. But I saw that just again being the sort of crossover candle before the drop, a bit like this. Oh my days, it's not loading. Huh. Can you guys still see and hear me? Hopefully. I think my internet's going slow.
Yeah.
Oh, good. It's just not loading the whole chart. But the same reasoning behind this one. Press down, press up, treat it like an inside bar. Sorry. So Danny, I just seen a. Oh, sorry. I think I've seen. Oh, sorry. There's more stuff in here. So I'm with you, Con. It would be great to have a little help with the markups. Yeah, 100%. And then Con said, plus it's very exciting that you've explored weekend trades. Just love that this strategy is constantly evolving. Yeah, it's good. And then Danny has said, is that what you've averaged this year? 20-ish are clearly don't have a good understanding of the strategy yet. No, I think you do have a good understanding, mate. From what I see in Discord, you do. Yeah, some some weeks there's been over 100, but I've averaged in the weeks where I've been able to trade. So February did exceptional. I did, I think it was 2 or was it 3 weeks in a row where I got about 45R each week.
Okay.
Like,
Can I just check? Were you trading 1% risk on those?
yeah,
Okay, fine.
yeah,
Good. So we could have done that.
yeah. And then, well, no, I wasn't risking 1%, but they were 45R weeks.
No,
So
that's fine. That's fine. But like, what I mean by that is, had I put the same trade on as you, would I have got 45R, or would I have got
yeah,
say 15R
yeah,
because I was only doing 1%?
No,
See
he
what I
said
mean?
R, not percent. So you multiply your percentage by the R.
yeah, spot on. And I showed James a
I see what
screen.
you mean. Yeah, I see what you mean. Yeah.
Yeah, I showed James a screenshot. This was it before you were in FTR or just after, James? But I think I sent you a screenshot and it was like fucking I think I did like 30% of my account on one trade and I was like, yeah, this one's gonna be all right. And it just went straight to stop loss. And then I did another one. I did like 2 or 3 and it was like 11 or 12%, which I did for about 4 or 5 days. So 11 or 12%. Because then I just stuck properly to the plan rather than just taking silly risks. But I've worked my way back down to 4% risk per trade. So last week was painful. I watched my account go down by just over 25%. It was hard. So yeah, bit shitty. But it's just one of those things. I think really though, the safe level is it's got to be between 2 and 3%. Because I think once you go, actually, Matt, you'll probably know this better than any of us from the accountancy background, but I think once you go below about 40%, I think just the general maths, below 40% of your starting balance, it becomes increasingly difficult to continue in an upwards trajectory. But yeah, it's 25% or 26% down last week, which was hard.
Yeah,
But you are because you're using more than 1% on each trade. There, it goes up again faster, isn't it? Like if I had -5, I'd be -5%. No biggie. But then if I decided, well, actually, I haven't put 2 grand in the account, I've put 1 grand in the account. I'm just going to trade 2%. What that really means is I'm just trading at 2 grand instead of 1 grand.
Yeah, that makes sense. So yeah, I think this week, I finally got my UTR number through, so I can transfer hopefully a lump of cash over to a new account, which is going to be a business account. So that should be good in terms of tax, hopefully.